Hello, hello. We have David Chernyak here from the Consumer One team. Let me turn that brightness up. Um, all right, and I have oh, I have the one moment here. Share screen here. I have the final financial presentation here. All right, let's get this bad boy going. As I said, David Chernyak here from Consumer One, final financial presentation. All right, first we're gonna be looking at the profitability here. So we have the three companies here. We have Ignacio doing ST Lauder. We have Maxwell doing Activation Blizzard, and me, David, doing General Mills here. All very well-known companies. For the gross profit percent, we have 75%, 75.2%. For Ignacio, we have 67.7 for Maxwell and 35.45 for me. Operating profit percent, we have 4.2, 24.8, 16.7. Net profit percent, 4.8, 25.1, 12.4 for General Mills here. All right, then we have the growth in the gross profit, and it's 6.4% for the SD Lauder from 2019 to 2020. A decent increase there. We have a decrease of 11.8% from 2018 to 2019 for Activision Blizzard, and a 1.2 steady increase here for General Mills from 2019 to 2020. Oh, and a big jump here for the operating profit growth of 73.8 for SD Lauder. We have again a negative, another decrease here, a 19.1 going the wrong way here, and there's going to be for Activision Blizzard here, and a 12.3% increase for General Mills, and then the net profit growth is 61.2%. Big jump here from SD Lauder. Again, another decrease from Activision Blizzard, 17.1%. And a 2.1% increase from General Mills here. So looking at it here, it does seem that right now the SD Lauder is the most profitable. Looking at it right now, and we're going to be looking next at liquidity, and we're going to first be looking at working capital, which is just the current assets subtracted from the current liabilities. First we have SD Lauder. And it's going to be 3.7 billion here. For the working capital for Activision Blizzard, it's going to be 4.3 billion, for almost 4.4. And then for General Mills, it's actually a negative here, which is very surprising. I did not expect one of the companies to be in the negatives, but for General Mills, it is almost $4 billion negative. They have almost 2.4 million more current liabilities than current assets, which is quite shocking. It's quite shocking for such a big company to be just kind of gambling a little bit with all these current liabilities. Need to take care of those. And we have current ratio next, which is almost the same thing. It's just current assets divided by current liabilities here. We have a 1.7 here for SD Lauder, solid. We have a 2.5 for Activision Blizzard, and a 0.7, which, it's less than 1 because of the current liabilities being more than the current assets here. All right, next we're on to solvency. And for solvency, the first thing we're going to be looking at here is a debt to asset ratio, which is just the total liabilities this time divided by the total assets. And here you're looking for a smaller percent, because the higher percent is we would say riskier, because having higher total liabilities, less total assets, not a good place to be in as a company. And for SD Lauder, 77.7%. That is quite risky there, quite risky. Activision Blizzard looking pretty solid at 35.5%, and General Mills almost hitting the middle here with 44%. And free cash flow is the next thing we're going to be looking at for solvency. It's going to be net cash divided by capital expenditures subtracted, or the capital expenditures subtracted from the net cash, excuse me there. And then we also are subtracting cash dividends from the net cash. And for SD Lauder, we are 572 million here. For Activision Blizzard, it's going to be 1.4 billion here. Ooh, big numbers here. For General Mills, it's going to be 554 million. And looking at these numbers, I'd say that right now, that Activision Blizzard is doing pretty well in terms of solvency. Next thing we are going to be looking at here is efficiency and effectiveness. And first thing we will look at for this category is return on equity, which we have SD Lauder of 18% or 0.8, and then Activision Blizzard at 0.12, and then General Mills besting both of them with a 0.25. And then we'll be looking at the inventory turnover, which is going to be for SD Lauder a 0.34, very low inventory turnover there, and a huge, just quite the inverse here is a 173.04, and General Mills kind of hitting the in-between again, not really, since, big difference here, but 7.27. And then for return on assets, going to be 0.04 for SD Lauder, 0.08 for Activision Blizzard, and 0.07 for General Mills. Relatively very close, all of them. Other factors including cash flow. Alrighty, for this we'll be looking at cash flow from investing. SD Lauder is going to be very, very high here at almost $7 billion here. Activision Blizzard not nearly as much here, with just 45 million for them. And General Mills actually negative in this. It's going to be $486 million in the negative here. Alrighty, and then the PP analysis, it's going to be gross PPE. For SD Lauder, it will be $5.1 billion here. Activision Blizzard, $1.234 billion. And for General Mills, it's going to be $10.3 billion. Wow. General Mills is besting them here, but the thing that really matters is the net PPE at the end of the day. It's going to be for SD Lauder 2.2, basically just basically $1 billion for the net PPP. And then Activision Blizzard at 485. Basically a fourth of SD Lauder here, making sense since they did have actually like a fifth of SD Lauder's gross PPE, and General Mills coming in at almost $4 billion, making sense because they did have the highest gross PPP, and they would have the highest net PPE. Alrighty. And we're coming to the conclusion here. So for the conclusion, it's recently Activision Blizzard seems to be declining a lot, but they seem to be in a lot as of late, but they seem to be in a good place now. Their working capital and current ratio are the biggest of the three. And for SD Lauder has been profiting in the most recent 10K report, making them a very successful company as of right now. But looking at their riskiness, this could be subject to change. All right, and for General Mills, they seem to be the most stable, gradually increasing, the past few years, just very slight increases everywhere. Not too much risk for the future, but they do need to figure out their current assets and current liabilities, because this could be a very big thing and is quite scary, to say the least. Alrighty, and that is my conclusion. this was my presentation. I hope you guys enjoyed once again. I will see you guys in the next one. Where is the oof, one moment here.